Bala joins us now. Let's take the conversation forward with him. Bala, good morning. Thank you for joining us. Bala, on a day when Apple gave a profit warning, we are getting evidence of a little bit of slowdown happening in the world. And why are markets so immune right now, and why they are not reacting to bad news?
Of course, market has become quite resilient for two reasons. One is the overall liquidity in the system is quite high. And second is interest rates in general, I think, are turning downward. And third, of course, post the budget, some bit of optimism came back. So therefore, that has kept the actually flow into the market somewhat intact. And also, there is a growing feeling that January, the February, especially the current harvest season, likely to be better than I think what was generally estimated. Therefore, we will see some kind of income at the rural level could also pick up. Therefore, there has been a strong feeling that all of us have built, especially in the last 2-3 months, even after seeing the budget. Maybe worst is over, and probably we'll see some here onwards uptick coming in. And that uptick is already being seen actually in the automobile numbers, though it's actually incremental fall actually is getting reduced. But the growth I think could come back, not I think big time, but at least we'll see the trend moving upward. And these are some of the things I think is holding the market reasonably in a good state. And again, thanks to the flow that's been coming into the Nifty and Sensex stocks. Having said that, I think if you also divide the market into two parts, of course, PSUs are getting hammered, and we have seen actually a significant fall in PSU stocks. And that is the function of the continuous supply of PSUs coming in the form of an ETF. And suddenly we see actually some bit of that supply is actually coming to the market eventually, and therefore I think putting pressure on the prices. But otherwise, broadly, if one looks at it, there is the optimism which is missing for quite some time is now getting reversed in the form of at least what is behind us. Probably as we move forward in 2020, we will see improvement coming in. As long as the trend looking upward, I think the market will start building up some kind of hope, and on the basis of which you would expect the market to get stabilized.
Bala, but ex-SBI, is this the time to really put in money and bet on PSUs? Because, like you as well just mentioned, there are reasons because of the excess supply, which is why you're seeing this pressure build in. We know these stocks are at a multi-decade low, and sooner or later, the government will have to come up with a divestment plan, which would perhaps re-rate this entire cluster.
Yeah, I think interestingly, we did some kind of analysis. The entire PSU space came to such a level, it became one attractive from 2-3 angles. One is the dividend yielding of some of these companies became very attractive. Second is any P multiples or price to book multiples have come to such a level below one times. In some cases even 0.5, 0.6 times. So definitely actually it's becoming very attractive from the buyer's point of view.
True.
Having said that, there always a hanging sword which remains the government of India chooses the option of say strategic sale. And then discover value for some of these companies, looking at the overall valuation of the companies, and they're able to establish one track record of, yes, we have now made one strategic sale, such as like BEML they identified, now they identified BPCL, probably they will do Air India. Such thing, if they're able to showcase one examples, then probably you'll see the recovery of value happening for across the PSU segment. Having said that, this point of time, there is a bit of fear that if the supply overhang, if it
so
comes...
So don't jump in just yet, you say.
Otherwise, valuations become attractive. Some of these companies are available at 5-6% dividend yield. It's something which is it's been haunting all the money managers for quite some time. Having got the ownership in some of this segment, purely on the basis of value, but is not delivering returns, then how do you actually manage that? It's mainly, I think, the supply-demand issue.
Bala, is this market perhaps telling you something which purist and old-time fund managers are not able to realize? If you bought into NTPC, you've not made money, you've actually lost money.
Yes.
If you bought into DMart, which was expensive, you've made money. If you bought into Bajaj Finance, it's been a home run for you. But if you bought into SBI, it's a cheap stock, it has value in it, it's not really giving you the desired return. Now the fund manager would say, look, I need to generate alpha. I need to give my unit or my investors benefit of an uptick in NAV. So are you at Birla AMC now rethinking the way you need to invest, considering the old school is not working right now?
Yeah, fortunately, Nikunj, I think we have been taking the middle path, neither on the side of too cautious nor on the side of too optimist side. So as a result of that, we are able to actually manage the portfolio in a manner that actually gives you some bit of better experience on few of large funds that we are managing. Having said that, yes, that dilemma of course does exist it is whether you like to buy a company which has got a high, low valuation, but relatively the replacement cost of some of these companies is very, very high. Therefore, nobody can set up such kind of huge business model. And at the same time, buying into companies which are trading at high P multiple, which has got a high growth. I think the way we see is one has to have a mix of both. You cannot ignore one at the cost of the other. And when the market turns completely in favor of value companies, that's the time I think if you want to chase and make the investments, I think it's going to be extremely tough.
But will it turn, Bala? Because the more I look at some of these so-called value companies, the more I'm getting convinced the relevance of some of these businesses may not be there. We've been waiting for this turn for not a year now. For last 3-4 years, the proposition has been that to buy things which are cheap, look at companies which offer a better comfort of dividend yield, look at enterprise value or not PE multiple.
Correct.
So that has not happened. How much more do you think value investors will have to wait before this turn happens?
I think it's all about the consolidation process. As the consolidation happens, and you actually the some bit of number of players comes down, and then it gets consolidated in few players, but they become a large business. Then probably what we are saying may occur in terms of turning around. But as you rightly said, yes, it's been waiting period for quite some time. I think the way we see is again and again. I think the function of supply demand, especially on high value companies, the deep value companies, especially coming from the public sector companies, there is a continuous supply. The continuous supply ensures the equal demand. If it is not there, then supply actually brings in the market price, and therefore the price becomes more cheaper. But in the case of high value companies, of course, there is absolutely no need for them to raise incremental capital. They are able to sustain their business model, keeping in the existing cash that they have, and they are able to build actually growth as well. I think this is actually a dichotomy I think is currently exists. But somewhere it actually have to converge actually. That when the conversion happens, of course, it all will depending upon, as I mentioned earlier, that one example of the value getting created in the form of a strategic sale, and that will actually set the ball rolling for the rest of the companies.
Interesting. So in terms of where you see that value being created, Bala, there are the usual suspects, of course, but let's just talk about that once again, because there are a whole handful of stocks right now. Nothing's really standing out. Everyone's wondering, or big question marks around when and where that strategic sale will come in. Are there any sort of any stocks that you feel are well poised to take advantage of, whether it be also because they have the advantage of a sectoral churn, growth in a particular industry?
Yeah, if you look at clearly, the power sector is going through a consolidation, and power transmission has been going through a consolidation. And the regulatory frameworks keeps on changing, but at the end of the day, somewhere they have to find a solution. A sector which is a dominant sector for the country as a whole, what need to be addressed in order to actually make them healthier, as well as create value for the shareholders, as well as same giving a better experience to the consumers. At the same time, if you look at the OMCs, it's large sectors, and once the BPCL is strategic sale happens, then one will actually realize the value of the sectors, how much value it can create. But it's all deep value companies. The question is they are not actually reflecting on the price movements. I think if you look at the sectors on the infrastructure sectors, especially the capital goods sectors, it's been actually underperforming for quite some time because incremental investment has not been coming forth.
Sure.
But I think there will be some time will come. Of course, not in the immediate future, but maybe as your economy start turning around, some of the capital goods sectors could also actually can do better. But they have of course underperformed the market quite significantly in the last 2-3 years.
So you said that you do see a balance and you see them converge. But if you had to allocate, let's say, a percentage, just to give us an idea, how much more would you start to allocate to some of these deep cyclicals versus, let's say, the so-called traditional defensives like a pharma or IT, where you also do have select stock holdings?
So I think the way, of course, is being done is one is of index weights. Index, of course, is a representation of many sectors, and each one of them carry a weight. The question is how much you can go underweight and overweight on each sectors, keeping in mind the overall broad index movements where the money is coming in.
Sure. And
second is how much actually you want to go overweight. Normally in any funds, when we manage large cap funds, I think underweight, overweight, we keep about 20-25% underweight, and maximum it can go or overweight purely on the basis of index weights, which are of course large. For example, IT, we cannot afford to be too much underweight given the fact that some of the headwinds that could come from overseas, I think is completely different from what we are seeing in India.
Sure.
Therefore, probably will go for the neutral weight.
Okay.
The same way, banking sector is one of the large sectors.
Yeah.
And when the economy starts picking up, of course, the banking sectors will be the proxy to the economy. Therefore, again, you cannot be underweight in the sectors. But we have to play around within the stock selection criteria. So this is a challenge we normally see.
Stocks have priced in the telecom troubles. We don't know whether it's going to be a triopoly or a duopoly that the sector is headed in for. But most banks, we were chatting with SBI the other day, they seem to be claiming that they're completely coughed up and they have the cash on their balance sheet and they've provisioned enough for telecom if indeed any of the companies has to shut shop. But do you think the prices on the screen currently are pricing all of that in?
I think it looks like some of the fear that is surrounded by the telecom sectors seems to be reflecting on the stock price. I think the markets have reacted post the recent AGR ruling and then subsequent development seems to be reflecting on the prices of some of these banking stocks, purely on the expectation that what will happen if something had to happen for some of the exposure they have to the sectors. So that in my view is reflecting. But of course, as the actual event happens, you will probably see a little bit more pressure. But having said that, I think market nowadays react much ahead of the real event happening. So that's the way I think the market react. I think my views are all coming in the price. Maybe the downside could be little more, but I think the downside may not be very large given the fact that the market has been correcting, expecting some of the events will have an impact on their numbers.
It's not going to turn out into an IL&FS NBFC crisis kind of thing.
Exactly. Even in credit market, I think one of the assumptions that we are having is thanks to one move of Reserve Bank of India, which is the long-term repo which they have introduced, is pumping in 1 lakh crore liquidity, has changed actually the whole credit market substantially. On the contrary, I would probably assume in the next 6 months, there's so much of liquidity that is sloshing in the system. There will be a time in the next 6 months that people will start looking for lending. You may not probably get the borrowers at reasonably good rates. I think that could be the inflection point for the market to turn better.
It's interesting you're saying 6 months because we were listening to Pawan Munjal this morning, and even he was talking about the recovery coming in closer to the next festive season. So at least 6 months is what he was saying as well.
But the problem is that markets are here, economies here. Markets are moved up in anticipation of an earnings recovery. With a 4.5% GDP, Nifty should not ideally be at a record high. Market cap to GDP should not be at this elevated level, which currently it is. So you're right when you say that high frequency data points have improved. There is light at the end of the tunnel now.
Correct.
But some would argue that markets have already moved in anticipation of strong earnings. And when the earnings will actually happen, some would say that, look, this is an event which is already priced in. So where does the upside come in now?
I think upside would come purely on the basis of actual numbers starts coming in from the companies. So my own experience has been there's one sectors which normally watches about auto sectors. You see the numbers, month-on-month numbers, even it starts showing some bit of an uptrend, which we see it in some of these, in the case of commercial vehicles, we saw some bit of an uptick, but not big time that has come. And second is we still have to see the scrapping policy is getting implemented. As the scrapping policy gets implemented, maybe in the next 2-3 months, that will set the ball rolling for the next year, how the numbers will pick up. So therefore, there are many things that will come. I have always seen when the market falls, it doesn't give you early warning indications and falls. At the same time, when it moves up, some of the indications that could come, which I think bring in some bit of buyers in the market, purely on the basis of some bit of uptick that comes on month-on-month numbers, which is the micro indicators coming from some segment of the market. So that's the way I see it, that the trend is changing.
We are going high because of liquidity. 14,000 crore has come in this calendar year. That's not even 2 months. If flows are strong and if liquidity is really the bedrock on which markets are moving higher, for the moment, markets are voting for high price stock but visibility stocks. So if liquidity is in this slow growth world is going to be coming to Indian stocks, it will chase low growth stocks and it will chase few stocks. So till the time liquidity does not reverse, do you think the market nature and the polarized nature of the market also will not reverse?
Yeah, I think polarization of the market is a function of which segment of the market the money is coming. If you look at the flows divided into 2 parts, the one which comes into the mutual fund, which is monthly is about 8,500 from the SIP, and aggregate, as you rightly mentioned, about 2 months, close to about 14,000 crores that comes in, that goes in diversity equity portfolio. The diversity equity portfolio, they go and buy the same stocks because they don't actually go and look for new stocks to be bought. Therefore, you buy, even if the stock is costly, you buy the same stock in the same portfolio. Therefore, the demand for such kind of stocks remains high, but there is no supply, therefore the stock price is dwell.
Exactly.
But having said that, in the case of, if you apply the same principle, in the case of ETF, whatever the money is coming in the Nifty ETF, Sensex ETF, it goes and chases the same set of stocks in the same proportion and as part of the portfolio. Therefore, they continue to do well. So that trend, I think, in my view, is not going to change. I think we'll probably see with the EPFO putting money in the equity, each year incremental of about 10% they can put in ETF and 5% they can put in diversity equity funds. And given the fact that diversity equity fund they have been investing for the last 2-3 years, there is high probability that the entire money could also move to the ETF model. If there remains an ETF Nifty focused, then demand for Nifty stocks remains high. Sure. Therefore, the polarization will remain good. But at the same time, that what I mentioned earlier, if the market remains the way it is, and the way I think the RBI has injected liquidity in the system, that starts playing its role in terms of bringing in the interest rates in the form of a transmission of rates for the lower end of the borrowers. That's the time I think we'll see the pickup happening. That, in my view, is with 6 months we should see it happening.
I've always said this, that what I've learned in last couple of years is that market's all about moods and moods. It's always this constant comparison of what is happening versus what should happen. So Bala feels that earnings will happen. Markets, global fund managers feel earnings will not happen or recovery will not happen. There is liquidity, which is a compulsion. Since the flow is with global investors and they don't think India will recover, they are buying those 10-15 stocks. So I don't know what the end game, Bala, is. But for the moment, if you got Bajaj Finance, you have Bata in your portfolio, these are good markets, right?
And there's no immediate risk as you see it. From what I sense, it's neutral to positive here on.
Yeah, no, that's true. I think the way the trend has been, a good company, good well-governed company, giving an average growth of about 22%. And in the current market condition, they actually gained a more leadership position. The market is willing to take a more bet on that. Money managers are willing to take a bet. I think the challenge for them is the question is how much you want to own them.
Right.
So it's been a big challenge, however good company it is. The question is the moment you go overboard in terms of having the larger ownership, when the trend reverses, then will you be able to capture that kind of the risk that you may be running on underweight on certain sectors. That's why I think you go by the balancing act, but the balancing act also comes at certain kind of price. But that's something one has to wait for the actual reversal of trend is happening.
So for our retail viewers, they still stay put into balanced funds, have equal exposure to equity as well as debt?
Yeah, I think the balanced fund, anyway, one has to look at the longer term. And the balanced fund, especially in these kind of occasions, the balanced fund has got the nature of taking a larger exposure to equity, of course. And within the equity, that tendency to go and look for ideas or stock picking coming from the mid and small cap space, which has not delivered so much return in the last few years. Therefore, the balanced fund as a category in relation to the expectations are not done great. But having said that, as part of the allocation, where you have no need to worry about cash calls and no need to worry about which segment to go for it. Therefore, the balanced fund as a category will remain as one of the category. But having said that, where we are today, I think we probably will see the multi-cap funds would probably be one of the would do best, given the fact that as the rest of the market in next 50, if they starts performing, then multi-cap fund actually probably would have a better opportunity actually to give a better experience to the investors.
Okay, Bala, on that note, we'll let you go. Thank you as always for taking the time out and joining in the studios. Okay.